Hi students, this is Nikhil Sanjay Rekha. You all know that budget has been released, and even today the budget is being discussed in the Parliament of India. And specifically this prelims is also very important because this year the students have to read and students have to study around two budgets, because last year an interim budget was devised or it was proposed, one, and second, the recent budget 2025-2026 budget came. Last year budgets was an interim budget. So technically what students have to do is that they have to read last year's economic survey plus the interim budget plus this year's economic survey plus this year budget. So the task is very gigantic. So Insights IAS thought that why not let's help the students. Let's help the students to make their preparations for economics, especially the budget ones, a little bit easier. So we are coming up with a series of budget and economic survey. So in that series, today's lecture is basically based on the basics and fundamentals of the budget. See, everybody says that budget has come, budget has come, budget has come. But the problem is that nobody knows what are the essentials and basis of the budget. I always say to my students that to understand the budget, you need to know about the existentialism of the budget and essentialism of the budget. So today we are going to talk about existentialism of the budget. That means what constitutes budget itself. So students, you all basically know that budget is basically a French word which is not mentioned in the Constitution of India. This is also asked in UPSC Prelims. But we, for our own convenience, say that this is budget, this is budget. It is technically known as annual financial statement. Okay. It is known as annual financial statement. But without going into ado of all these political things, so Article 110, Article 117, Article 112, 109, I will not go into that. We are going to look into economic fundamentals of the budget. So students, let's move and see this year's budget. So this year, when our Honorable Finance Minister presented the budget, so she presented a budget for the year 2025 and 2026. One. So you need to understand that this year the budget presented was for 2025-2026. But students, though the budget was presented for this year and the coming year, half part, we need to understand what are the existential things of this budget. So in this budget, students, there are three important concepts which we need to know. The first is what? Budgetary estimates. Second is revised estimates. And third is actual estimates. So in a lot of books or in the newspaper also, you can see that budgetary estimates are written as BE, revised estimates are written as RE, and actual estimates are written AE. This is very important. So we are going to chew on this for 2 minutes more. So again so this year's 2025-2026 budget. So what our Honorable Finance Minister presented was budgetary estimates for 2025-2026. Understand this. So technically students, our budget will start from 1st April. Okay, so 1st April 2025 till 31st March 2026. And I know that you're all smart to know that why we are now presenting the budget on 1st February itself. So you must have learned in your polity classes. And I leave the task to you. If you don't know, go and revise it. Why we advance the date of presentation of budget and what were the lacunas, or whether it was a colonial mentality, whether it was a colonial hangover, and what problems it brought. So this you have to study today. Okay. So budgetary estimates were presented by Honorable Finance Minister for 2025-2026. Along with this, students, I told you revised estimates were also presented. But revised estimates were presented for 2024-2025. That means for this year, revised estimates. So now you will ask, sir, why revised estimates? See, these are budgetary estimates. So we are estimating some things. That means what? We are thinking that this will happen, this will not happen, or I'm expecting that this would happen. But always reality is somewhat not very near or not very dear to the out to be. It could be overachievement also, it could be underachievement also. That's why we always write budgetary estimates. So when the time goes, we come to know that whether we are going to attain our goal or not, whether we are going to overachieve or whether we are going to underachieve. So that is nothing but what? For the last year, that means what? In this current year, revised estimates they have also presented for 2024-2025. Okay. And third point which I talked about, which was nothing but what? Actual estimates. So now students, you know that for last year, or let's say 2023-2024, already the economic scenario is clear. There is nothing left. So that's why we get an actual estimate. So there were budgetary estimates, there were revised estimates, and now we know that actually whether we achieved or whether we didn't achieve. So actual estimates for 2023 and 2024. So these three entities were presented by our Honorable Finance Minister. We need to understand this. So just we say budget, 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 and just we see the speech of the Finance Minister, or then all that academics come up with what their shortcuts and all. We miss the gist of these things. And this type of questions are asked in mains, and this type of questions are asked in prelims also. So you need to know what is budgetary estimates, and whenever a budget is presented, what are or for what year budgetary estimates are presented. Second, when we talk about revised estimates, for what year revised estimates are presented. And when we talk about advanced estimates, not advanced, it is actual estimates, remember that. So when we talk about actual estimates, we should know that for which years the actual estimates are presented, and they are all attached with what? This year's budget or this year's annual financial statement, to be very precise and constitutionally right. I hope you got this. Clear? Okay, so if you have any doubts, you can come and ask me later. You get this? One. Then, so now when we think about budget or when we think about annual financial statement, we need to know or we need to understand what type of budgeting our India has adopted. So budgeting or budget in India is basically constituted of three types, we say. Okay, so there is outcome budgeting, there is zero budgeting, there is gender budgeting. So students, gender budgeting was a UPSC 2017 mains question GS3. You need to understand this. Okay. So in the flow of material, in the flow of let's say whatever materials are available in the market, we forget the basics. This is what my attempt, and this is what Insights IAS attempt is all about. What? Tackling, or what we say, dismantling the basics. Because once your base is clear, you can build your superstructure. But the problem is that the bases are not clear. We are so much consumed by the market, we tend to forget what are essentials. You're getting this? So we all want to play like MS Dhoni, but we don't like to play like let's say our square cut which Sachin Tendulkar used to play. Are you getting this? So you need to understand the basics, because that is what makes you a great player. It's not just trying to emulate or copying somebody. And if you want to be original, you have to tap the original entities. This is what is this. So now students, let's try to understand what is outcome budget, what is zero budget, what is gender budget. So students, outcome budgeting in context of India was adopted in 2005 and 2006 by none other than the then Finance Minister P. Chidambaram sir. This is very important. So outcome budgeting was adopted by the then Finance Minister P. Chidambaram sir in 2005-2006. Okay, I will just first go for the basics, and then I will make you understand what is outcome budgeting, what is zero budgeting, what is gender budgeting. Similarly, students, in the same budget 2005-2006, we adopted gender budgeting also. So in the 2005-2006 budget, which was very special, so the then Finance Minister P. Chidambaram sir brought these two entities in our budget. Are you getting this? Then zero budget. So zero budgeting, it is inspired from US. So it was first presented in the US budget in 1970. This also forms a part of our Indian budgeting. Okay, so there are a lot of types of budgeting, but we are not concerned about that. What we are basically concerned about, what? Indian budgeting, or the budget of government of India. So the budget of government of India consists of three types of budgeting. So within the budget, you can see outcome budgeting. Within the budget, you can see zero budgeting. Within the budgeting, you can see gender budgeting. Now let's try to achieve this. What is outcome? What is zero? What is gender budgeting? So students, outcome budgeting is that type of budgeting where we have specific outcomes in the mind. So for example, let's say maternal mortality rate. So my outcome is what? I have to reduce maternal mortality rate to 2. That's it. And for that, how much resources are required? What efforts are required? That will all I put. So that means what? You define your goal, and as per your goal or as per your goal post, you put in the resources. And that resources are nothing but in terms of what? Money. That is nothing but outcome budgeting. And I already told you that it came in 2005, 2006, or it was introduced in our Indian budgeting in 2005, 2006. I hope you got it. Zero budgeting. So zero budgeting, students, is like, you get a new opportunity. So let's say, for example, last year, I was allotted 1,000 crores for Manrega scheme. Okay, 1,000 crores. So irrespective of whether the money was sufficient or not sufficient, irrespective of whether I achieved my goals or whether I achieved my goals or not, I start afresh. I sit and see what is required, what needs to be done. So starting with a zero baggage. That is nothing but what? Zero budgeting. So zero baggage, just focus on now. Okay, the power of now. Just focus on now. That is nothing but zero budgeting. And I told you, first time it was introduced in the economics in US in 1970s. I hope you got this. And third, gender budgeting, which is very important. Gender budgeting was introduced in 2005, 2006. So this is what? This was our 2017 mains question. Okay, so gender, students, the problem is that in Indian budgeting, gender we just consider as what? Male and female. But technically, as per the High Court of US, Minnesota in US, they say that gender is a social construct. So gender, when we think, so gender is more about males, females, LGBTQIA plus is there. But that component are not yet found. We have to still walk that path. But in context of India, gender budgeting is nothing but what? We do a sexual separation. Okay, sexual separation. So binary between males and females. So typically, students, in our gender budgeting, or what do we mean by gender budgeting in India? It consists of, first, the schemes or the money allotted to the women specific schemes. Okay, specific, only specific to the women. So for example, let's say for Nirbhaya fund, exclusively for women. So how much exclusively the money is allotted for women centric and women specific schemes? That is nothing but what? The schemes allotted or the money allotted to the women specific schemes, or the resources allotted. Second, we see the resources allotted which indirectly are responsible for women's upliftment. So this is a very general thing. That means, take an example of Manrega. Let's say, for example, Manrega, they allotted 1,000 crores. And as per our historical analysis or as per our economic analysis, we come to know that, let's say, around 400 crores are being paid to women exclusively or within the Manrega component. You know that in Manrega, males and females both work. So 400 crore goes. So indirectly, the Manrega scheme also helps for the empowerment of the women. So this is what is there here. So the path is very long. Then we will allot a specific so-called sum or resources for LGBTQIA plus. So our what we say, our fraternal brothers and sisters. So I'm doing that. They are also fighting trans persons. So from Bengaluru, there is Akkai Padamshali. She is fighting a case in the Supreme Court. Okay, then there is Gauri Sawant. She is fighting from Maharashtra. A lot of people are fighting for that. So it's a long time when we will truly bring the ethos, pathos and logos of the gender in our budget. But for now, we will Stick to this. Are you getting this? So we don't have that component in our budget. So gender budgeting is nothing but these two things. Did you get it? So that is what the budget consists of. So just to summarize till now what we did for budget. So budget consists of three entities: budgetary estimates, second we went for revised estimates, and then we went for what? Actual estimates. And they consist of different years when they are being presented. One. Second, we went for types of budgeting which are included in the Indian budgeting system or India's annual financial statement. So we went for what? First is outcome budget, second is zero budget, and third is what? Gender budget. I hope you got it till here. Clear? And I made you understand the idea of gender. Okay, so when you read about gender in society, it's completely different. And in economics, for economic considerations of your budget, gender is this. I hope you got this. I hope and you are also taking the notes. Clear? Now, let's move ahead. So students, whenever I talk about budget, okay, so for our simple purposes, I'm writing budget. I'm not trying to be very constitutionally correct every time. So budget consists of, students, two basic parts. Okay, so there is what? A revenue part, and there is what? Capital part. So budget consists of two parts. There is a revenue part, there is a capital part. Okay, so students, revenue part and capital part. I hope you know what is the meaning of capital and revenue. For those who don't know what is the meaning of capital and revenue, just try to know the meaning of assets and liabilities. So assets are something that when we invest in those assets, they give us revenue. Let's take an example. So if you invest in land, okay, let's say you invest in land for, let's say, 5 crores. And after 1 year, the price of the land goes up. It becomes 10 crore. So that means what? Land is an asset. You originally invested 5 CR. Now, if you sell the land, you are getting what? 10 CR. One. Second, let's say you bought a flat for, let's say, 10 CR. And then now you have given that flat for rent. And every month you're getting 30K as what? Revenue. So that means what? It becomes an asset. So when you are investing your money is not going somewhere. Your money or that asset or that entity is paying you back. That is nothing but an asset. One. Second, liability. So liability is nothing but what, students? If you invest in that, instead of revenue coming, you end up spending more. Take an example. So let's say you bought a car. Okay, you bought a car. So you bought a car, but now the car becomes a white elephant, because when you bought a car, you felt great, but now you have to fill the petrol or diesel or CNG, whatever you have bought, plus again maintenance comes. And so you end up spending more on that entity. So that becomes a liability. But again, students, the difference between asset and liabilities also depends upon how you are using that entity. Again, let me give an example. You bought a car, but now that car has gone for what? Ola or Uber, or let's say whatever new services are there. Okay, so now you have employed your car there. That car is paying you back rather than you paying the money inside. So it's giving you revenue. So the car which you invested or the money which you invested in that car is now paying you revenue. So the car has turned out to be an asset for you. If you use that car for your personal consumption or for your personal benefit or for your, let's say, luxurious thing, that car becomes a liability. But a car you employ for Ola or Uber or anything, so that is giving you revenue. So it becomes what? An asset for you. So that is the difference between asset and liabilities. And always remember that, student, the capital part of the budget is nothing but an increase or decrease in assets or liabilities. Are you getting this? If I paid an assets or liabilities, one. Second, the capital part of the budget is always a one-time payment. It's not recurring. It's one-time payment. I gave you 10 lakh. I gave you 10 lakh as loan. It's my capital expenditure. Okay. So in that capital revenue, again, there are two components. So there is expenditure and there is what? Receipts. Revenue also there is what? Expenditure, I'm using shortcut, and there is what? Receipts. You know what is expenditure? When I'm paying, it's expenditure. When I'm receiving, it's what? Receipts. I paid, expenditure. I receive, receipts. So in the capital part, I told you, it always deals with what? Increase or decrease of assets or liabilities. One. if I paid, let's say to you, 10 lakhs as a loan, so that loan is an asset for me because you're going to pay me interest again, and then one final time you will pay me my principal back. So the loan which I gave to you, let's say 10 lakh for the first time, it's my capital expenditure. Are you getting this? And let's say the interest which you're paying me, let's say 10K, you're paying me interest every month. 10K, 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 10K. It becomes what? Revenue receipt. Are you getting this? So capital part of the budget always concerned with what? Increase or decrease of assets and liabilities. Revenue part is what? Recurring. Again. So 10 lakhs I pay you as loan is a capital expenditure. 10,000 which you're paying me again. As I'm getting it back, it will be my what? Revenue receipt. Because I'm receiving it. And as it's again, it goes into what? Revenue part. I paid one time, this part. Clear? So a budget consists of capital part, a budget consists of revenue part. In that again we have expenditure, spending. In that we have again what? Receipts when we get it. Spending and receipts. Now, so let's leave capital part aside. Let's go to revenue. So revenue expenditure is there and revenue receipts are there. So in the revenue receipts part, students, remember that there are again two types of receipts or the two ways of receiving of revenue. For the government, we are doing what? A government budgeting, not our budgeting. Remember that. So in terms of revenue receipts for government, there are two entities. One is what? Tax revenue. Other is what? Non-tax revenue. Tax revenue, non-tax revenue. Tax, you know that again there are two types. Direct tax revenue. Other is what? Indirect tax revenue. Your GST is a indirect tax. Your corporate tax is what? Direct tax. Your personal income tax is what? Direct tax. Are you getting this? So you know the basics of direct and indirect taxes. So direct taxes directly affect you. You feel the pinch. You will feel the pinch yourself. Indirect taxes, you end up paying, but you don't know. So for example, if you go and buy a Parle-G biscuit, and let's say Ambani's son goes and buy a Parle-G biscuit, so you both end up paying the same tax. So technically, Ambani's child should be charged more because he's super rich. You should not be charged par him. Are you getting this? So direct taxes, you feel the pinch. Indirect taxes, you don't feel the pinch. Are you getting this? Direct taxes is proportional to your income. Indirect taxes, irrespective of your income, you end up paying the same. That's why indirect tax is not liked by a lot of people. Direct tax is better. That's why people are mooting for increasing the direct tax, especially on the super rich. Okay, non-tax means what? The government ends up getting some revenue, but it's non-tax. So if I want to give an example, let's take, so for example, if you're caught by a traffic havaldar, so traffic police, so you end up paying fines. So fine becomes what? Non-tax revenue. Let's say you go to the court and you have to get some bond paper or stamp paper of 500 rupees. You end up paying 500 rupees and they give you that stamp paper. So that money collected by the court or that for the stamp paper becomes what? Non-tax revenue. So in that you can make a list of non-tax, direct and indirect tax. So what I want to tell you is that revenue part is nothing but revenue expenditure, revenue receipts. Capital part is nothing but capital expenditure and capital receipts. And I told you, capital expenditure is more about what? Increase or decrease in assets and liabilities. Are you getting this? Capital receipts also is concerned with increase and decrease of assets or liabilities, but you get the money back. Remember that. This is nothing but what? And revenue expenditure basically is nothing but like, let's say grants, okay, payment of interest by the government. So let's say government has taken a loan from USA of 10 lakhs and government has to pay, let's say, some interest, let's say 10,000. So government ends up paying every time 10,000, 10,000, 10,000. So 10,000 is the government's expenditure. Grants means what? Union government giving grants, let's say, to the state of Karnataka, which are untied. So however Karnataka feels, they can do it. So it's a grant. Okay, it's a grant. So that could be used by the state of Karnataka either to build assets or either to pay their loans, whatever it is. But in the budgeting, they consider it as what? Revenue expenditure. They are not expecting anything. If Karnataka state uses to increase the asset, so something else will happen, which we are going to see. I hope you got this. Budget consists of revenue part, capital part. Are you getting this? Capital expenditure, receipts. Revenue expenditure, revenue receipts. So I have given some receipts. Revenue receipts, you got tax and non-tax. Tax is, you know that. Direct taxes, indirect taxes. Hope you got this. Clear? Great. Now let's move ahead. So also students, sometimes you also see these same things in budget. We say that budget consists of, let's say, revenue budget, and budget consists of what? Capital budget. Same thing what we did back, but I am writing little bit fancy thing. Okay, it looks very fancy, isn't it? Capital budget, and this is what? Revenue budget. So the budget consists of two components, capital budget and revenue budget. Clear? Yes?